Listen to me. If you're still struggling to become a profitable trader and you keep finding yourself losing trades or getting caught on the wrong side of the market, I'm telling you now, it is not random and it has nothing to do with luck. It's one of two things. Either you simply cannot map directional bias correctly, or sometimes you get your bias right, but you get entries at the wrong time. Either way, the result is the same. You incur losses, you miss the right moves, and you have inconsistent results. And both of these problems come back to one thing: market structure. Now, here's where most traders go wrong. Most traders don't have a mechanical rule that clearly defines what a valid high, low, and pullback actually is. And if you don't have a clear set of rules, you cannot correctly identify your trend, your changes of character, or your breaks of structure. Which means from the very start, your trading is random. It's not mechanical. And so random bias leads to random trades, and random trades lead to random results. And ultimately, random results just create doubt. Doubt in your strategy, doubt in your entries, and doubt in yourself. All of this because you're missing one clear set of rules that would change everything. When you open up the charts and try to define your bias without a pullback rule, you're essentially just choosing random highs and random lows each time. And you see, once the foundation is wrong, everything that you try to build on top of that is worthless. All of a sudden, you're mapping the wrong internal shifts. You're thinking that internal shifts are external shifts and external shifts are internal shifts. And you don't know what a real change of character is, and you don't know what a real break of structure is. You ultimately just miss strong highs and strong lows, and you think that weak highs and weak lows are actually strong highs and strong lows, and it's all just a complete mess. And all of those seemingly small structural mistakes end up putting you in trades in the wrong direction or at the wrong time. And that's why you're getting stopped out of trades. Now, let's say you fixed the first problem. Let's say you correctly map your swing structure. You correctly identify that the market is bullish, so your bias is right. There comes a second problem: timing. Because the truth is, knowing direction simply isn't enough. You can know the market is bullish and still lose. You can enter too early. You get stopped out before the real move starts. Or you wait too long and price ultimately moves without you. Now, I know you've all experienced both of these scenarios probably more times than you would care to admit. So even with a correct bias, your results are still inconsistent because direction without timing is incomplete. If you don't have clear rules for when momentum is actually shifting, when the market is actually moving, you're still guessing. You're just guessing in the right direction, which is a little bit better. But again, guessing even with the correct bias still leads to inconsistency because bias and timing aren't separate skills. They're actually built on the exact same foundation, which is market structure, proper structure across multiple timeframes, direction from the higher time frame, and timing and accuracy from the lower time frame. Once you understand that and truly understand it, trading becomes simple. Now, here's how it's supposed to work together. You see, the market can only do one of three things at any one time. It can either trend up, it can consolidate, or it can trend down. You see, your job isn't to predict the market. Your job is to correctly identify which phase of price you're in. If it's trending up, your job is to look for buys. If it's consolidating, your idea is probably to stay patient and wait for clear direction. And if it's trending down, you should be looking for sells. That is as simple as it is, in theory, right? But that only works if your structure is truly defined properly, because bias tells you the direction, and direction removes half the decision making. Once the direction is clear, the next step becomes timing. And that's where multi-timeframe structure comes into play. The same pullback rules that you use to identify your bias in the higher time frame also applies to the structure and order flow on the lower time frames. You map your structure on the higher time frames. That defines your swing points. That gives you your higher time frame bias. That gives you your daily bias. And then you drop to the lower time frame. And at this point, you're not looking for direction. You're looking for accuracy. You're looking for timing, precision. You're looking for confirmation. And when the lower time frame shows a valid change of character in alignment with the higher time frame bias, that's your entry. That's multi-time frame alignment. Direction from the higher time frame, timing, accuracy, and precision from the lower time frame. That's how market structure is supposed to work. And this is exactly why we have built Orthos Labs Market Structure OS. It's a structure engine that defines bias and timing mechanically. So you no longer have to manually map your swing points. You don't have to second guess what counts as a high and what counts as a low. You don't have to redraw your structure 5 times and check it 5 times to make sure it's correct. It reads swing structure to define your higher time frame bias with complete accuracy and predictability. And it separates internal from swing structure properly. It places the valid changes of character so you know when the market is actually reversing, not just noise. And in your top right-hand screen, you instantly see the multi-timeframe trend. It will show you your weekly and daily bias, along with the 4-hour, 15-minute, and 1-minute market structure. So you immediately know whether each time frame is bullish or bearish. And it's all built on one mechanical pullback rule that I created many years ago, which is the same rule that we've used internally inside of our mentorships that we've never showed externally. In essence, it's the actual solution to your market structure problem forever. Never have to guess about highs and lows, about trend ever again. You never had to assume or hope that you've chose the right high. It automatically does it for you with a simple click of a button. And in just a moment, I'm going to show you how it works and what it looks like on the actual charts. But just before that, understand this. If you trade SMC, everything comes back to market structure. Every entry, every setup, and every decision, it all depends on how you define your structure. Structure defines your trend. Structure also defines your timing. And so if your structure isn't built on clear rules, your bias is random. And if it's random and it's not repeatable, then your results will also be random and inconsistent, which a lot of the times ultimately just leads to you being caught on the wrong side of the market. If you just had the right direction, you probably would have made money. But the truth is, again, even if your bias is right, you might have the wrong entries or the wrong confirmations. And so that's why, again, higher time frame bias, lower time frame confirmation, all built on the same principles that I developed quite a few years ago now at this point, to be honest with you. And it has worked extraordinarily well. So all that to say, this will solve your market structure in a click of a button, and it will provide you consistency in your rule-based approach. Now let's talk about access. Right now, we are literally running a founder's lifetime access to this tool, meaning you will have access to this tool forever for a one-time fee of $197. But the truth is, we are building this aggressively. Right now, it defines structure and bias mechanically. We're actively integrating our strategy models into this operating system, which means soon it won't just define the direction and timing. It's going to be showing when to enter and how to enter. And once that layer goes live, pricing will dramatically be shifting. Instead of it being a one-time fee of $197, we're going to be moving to $1,497 per year. That's $1,500 a year or $197 a month. And when that happens, lifetime access is gone forever. So founders pricing is early positioning before we expand on what we're building. And again, if you want to lock it in as of right now at $197, no monthly, no yearly, no upgrades, you're in. So ask yourself something simple. If your two biggest problems are bias and timing, and both can now be defined mechanically, why continue doing it manually? And this is something that I drastically changed in my own personal trading. I stopped trying to rely on my own read on structure and just used my own indicator. That's why I built it, to help my trading. And now I want to bring it to you guys. So again, it's up to you. The choice is yours. You can take it now, one-time payment, or you can wait and pay monthly. That's ultimately your decision. So if you're serious about directional bias and SMC done properly, this ultimately makes sense for you. You can go ahead and lock in your founder's lifetime access before the pricing shifts. You can just click the button below and you'll get access. Now, what I would like to do, if you don't want to go there and get that right now, is I would actually like to walk you through some examples of this indicator, of this tool in action. So let's do that. Okay, cool. So let me walk you through a couple of examples of what the indicator looks like, how it works, and ultimately what you're really here for is how it makes your life easier. So with that being said, I'm on EU, which is for the most part the primary currency pair that I trade, but this works on any things that you want to put it on. You could look at this market now and, maybe there's 1,000 of you watching this video right now. And so many of you could be marking your structure and swing points different, right? Some of you may see this, that we are bearish right now. Some of you may see that we're bullish right now. Like some of you may be looking at this like, okay, we consolidated. Okay, now we had this massive sell-off. We're bearish. Maybe some of you are looking at it like, okay, well, actually, we're putting in bullish structure And now we're kind of coming back into this area and we're going to go for the new highs. Like there could be so many different angles. And the interesting part is it's not really about how different people see it, right? The big thing that this solves is maybe 1 week you come into the market and this price action to you looks bullish. Maybe a different week you come into the market and this price action to you looks bearish. When you have those situations, when you don't know, is this a low or is this the low? Is this the high or is this the high, or is the highs in here? Is this bearish structure? When you don't really know which high and which lows to actually mark out, you don't know what actually is a change of character, that's when trading becomes random. And that's just the reality. If you don't have a systematic, repeatable process that follows the same rules all the time, then you're going to get random results because you're going to be taking random actions. So you look at this market and, again, you could look at it 1 week and it's bullish, 1 week it's bearish, 1 week it's neutral, you don't want to trade it. But in the click of a button, you can just apply the Orthos Labs structure OS and it will tell you. Like quite literally, it will tell you. You can see not only does it tell you the structure, but it also gives you the session indicators. Again, if you're coming from the YouTube channel, God knows how many people have asked me about my session boxes. How to draw Asia low, how to draw Asia high, what about London session, what about New York session? This comes pre-built for you. So the indicator is with the session timings inside of the indicator already. You can see on the screen, it shows us all the highs and lows as far back as we would like to go, right? It shows us all of the highs, all the actual real breaks of structure. Again, you look at this situation in here, right? And you see we come lower, we put in a higher high. Now, many people would overlook this little pullback here, for example, right? Maybe many people are looking at this like, okay, high, low, high, low, high. Okay, now we're bullish. And they're trying to buy this entire price leg, not realizing that it actually shifted bearish all the way down here. And actually, we should have been selling. And so, yeah, like a click of a button and it just tells you. And it's, again, the key part is the current actual swing highs and swing lows. So the story of this market is, it was bearish in here and then it shifted bullish. And that's a higher high. And we had a pullback and we had a break of structure. And we had a continuation. And this is actually a high and this is actually a low. And the reason that this isn't an actual high and this is an actual low is because it doesn't follow the pullback criteria that this indicator is coded on. It's coded on a very specific set of rules that tell you whether it's a high or a low. So this is a higher high, higher low, higher high. So we're bearish, right? So because we're bearish, this is the low that's in control until we break and close below it. Notice that we didn't change character just upon wicking below it. We only changed character when we actually closed below the low. And so you look at this market now and it clearly tells you. It actually tells you very obviously the market structure. We are H4 bullish and M15 bearish. So if I'm an intraday trader trading the M15 as my primary daily bias, I'm interested in sells, right? That's simply it, right? And you find an area of interest, which in this instance, just a simple area of inefficiency, fair value gap. And any time frame you go on, right? You go on the 1 minute time frame, it's going to tell you the same thing. And so in this situation, what you can see is the M1 is already bearish. So the 15 minute is bearish and the M1's bearish. So that's our confirmation. But notice that we actually have internal as well. You see the external here is swing high to swing low. But sometimes when an external range is so large, we actually have to go internal and use the internal as our confirmation. And so, for example, like you can see here, right? We are higher highs, higher lows, higher highs, higher lows, higher highs. I like to have my indicator settings on quite faint. I like a minimalist chart. But if you want to put them on, large, you can put them on large and it will give you a lot larger. Now it's quite clearer than what it was before, for example. But I personally like to have it on a little bit different. So you can see here, internal higher high. The IHH means internal higher high. IHL, internal higher low. IBOS, internal break of structure. Internal higher high, higher low, break of structure, higher high. So right now the internal is actually bullish. So if you're a bearish M15, which we are, you're not really interested in trying to short the market whilst it's bullish. You need to wait and on an internal change of character. Then really and truly, that's when you can actually look at trying to sell. And then again, you just got to find certain areas of interest, like these levels in here. And again, not saying this is going to play out, but just to show you, like, this is, it kind of tells you itself ultimately. And even if you're just, again, what simple 1-5, again, no idea, does it tag or not? It does tag in this instance, right? Internal change of character. And now you can see, now we have internal lower low, right? And we're coming back to this level. Now, maybe you didn't get involved in the first trade. Maybe you wanted to get involved, you know, in the second opportunity, because prices trade in bearish, right? Again, these are just some examples. Minimum, you guys know me, especially coming from YouTube, I like to use a 1-5 risk to reward. But yeah, I mean, it's coded off of like the actual, you know, what the structure should be, right? There's another entry opportunity. Just trade in, well, the trend. Like what else you need to trade? And again, even if it's just simple 1-5s, right? And it tells you on every single time frame, even the 5-minute time frame. You can see here, swing low, right? Swing high. Sometimes the M15, the 5, they're similar. But I mean, yeah, does it hit it? Okay, most of them have hit the lows. And yeah, okay, just trading the structure, right? It's, so I just wanted to kind of show you a visible walkthrough on any single time frame, no matter if you trade the 1 hour time frame or if you trade the 15-minute time frame, it'll tell you anything, right? So 1 hour time frame in this instance is also bearish. So the 1 hour is bearish. This is the swing low on the 1 hour, swing high, swing low, right? You go to the 4 hour, it already tells you it's here. That's what I like about it as well. If I go to the 1 minute time frame, right, it tells me up here we have market structure, which is bullish. H4, bullish, expansion. M15, bearish, confirm shift. M1, bearish, continuation. Right, and I'll explain this in more detail inside of the trainings of the indicator as well. But there's also another thing here, which is directional bias, right? Directional bias is telling you if the weekly has a bullish directional bias, if the daily has a bearish directional bias. Again, if you understand daily bias and what it's built off of, this literally tells you what the daily bias is. I have a few different YouTube videos on this concept as well. So yeah, that's kind of it in action. Look, I could show you multiple different scenarios and examples. Like, let's look at this GU, for example, right? Again, maybe one day this is bearish for you, right? High, swing low. Maybe one day it's bullish for you. You're looking more internal, right? Or maybe now it's bearish for you, right? So you're like, oh, okay, we've taken the lows out in here. Well, I guess, is that the low? Is that the low? Is that the low? Maybe the low is down here. You don't have to guess. Click of a button. Oh, okay. So that's the swing low. So actually, if we take out this low down here, we're not actually bearish. We're still bullish. So look at this now. Weekly bullish, daily bullish, H4 bullish, 15-minute bullish. What do you think is the likelihood that price is going to trade higher? Like, just answer that. What's this in here? Little 15-minute order block across here. Like, you have full structural confidence and confluence to trade bullish. Again, like I'm telling you, the primary driver of SMC is going to be your market structure. And again, you can make this smaller, larger, like whatever. But like, let's say this, for example, some people are bearish right now. Some people are, and maybe you yourself, you're looking at this, you're like, okay, well, you know, we shifted in here. Oh, we're taking this low, we're strengthening this high. Okay, like I'm gonna short this level, right? And I'm gonna also target 1 to 4. Okay, like, are you in the least bit surprised? And as soon as it breaks, you can see now we have a new swing low. Everything told us that it was, yes, bullish. Understand? So yeah, like I could show you these examples for days. Look at this example here. Price is trending bearish, right? We're bearish. Maybe you don't see this as a high. Maybe this is a high for you. Maybe this is a high. Maybe this is a high. Who knows? But if you don't catch on, then you're in a blind spot. You're in the unknown. You're trading in the unknown. That's why you get caught on the wrong side of the market so much. Maybe you're someone who thought it was bullish, and first you tried to buy in here, not realizing this was an actual inducement. And then you took a trade and you got a stop loss. And then you're like, okay, now I got a stop loss. Now I'm going to sell. And your trade starts going well. And you're like, okay, maybe I'm going to sell again. Or maybe you missed out on that one. Now you're trying to trade again. And you get break even and stop losses. So that's my solution for it. I've tried to teach market structure so many times. And still, people have questions. People have doubts. People don't understand how to apply it. I don't know how many market structure videos that I need to create. People still don't get it. So here's a tool that does it for you. Enjoy.